Hi, Max Kaiser. Welcome back to the Kaiser Report. Time now to go to New York and speak with best-selling author Stephen Lieb. His new book is called Red Alert: How China's Growing Prosperity Threatens the American Way of Life. Stephen Lieb, welcome to the Kaiser Report.
Thank you so much. I really appreciate being here.
All right, great. Stephen Lieb, what is the American way of life that China's growing prosperity threatens? Break it down a little bit for us.
Well, I mean, it's already happening, Max. I mean, if you just look at the last, let's say, decade or so, what you'll see is that you've had a protracted, steady uptrend in commodity prices. I mean, there have been interruptions along the way. We've had a little bit of an interruption this year, but I think, maybe one of the best ways of phrasing it is if you had gone back, let's say, in a time machine to 1999, 98, and told, let's say, the top 20 economists in the world that U.S. unemployment is going to climb to 9.1%, and that Europe is going to be on the brink of major recession with virtually no growth, what would you expect the price of oil and copper to be? Well, I think those economists would look at the prices of oil and copper in the 1990s, and they would say certainly at the low end of those ranges. And that would be maybe 60 cents or 50 cents or maybe even 30 cents for the price of copper, and maybe $15 or $10 for the price of oil. Today, in this world, we're sitting with oil at $110 in terms of how it's priced in Europe, and we're sitting with copper well over $3 a pound. I mean, these are prices that are possibly 10 times higher than we could have reasonably expected based on current economic conditions in Europe and in the United States. Therefore, you have to conclude that, this rapacious appetite for commodities that China now has and will continue to have has really been a massive, massive headwind in terms of how Americans live. And it's not going to let up. If anything, it's going to get worse, because part of this appetite that China has for commodities comes from the fact that they see the writing on the wall, and they probably saw it 20 years ago, that you're not going to build a sustaining economy on hydrocarbons. It's just that simple. I don't know whether we're at peak oil or peak this or peak that, but sooner or later you're going to get to the point where you're not going to have enough oil or even enough coal to supply the needs of a world that's going to continue to grow. And China right now is preparing for those days. They're not trying to deliberately hurt us, but they're trying to basically prepare the infrastructure for the 21st century. And that infrastructure is going to include massive amounts of renewable energies, solar, wind, etc. China has an iron-like grip on wind because they control about 97% of rare earths. And rare earths are absolutely critical for making wind turbines. So when the U.S. finally wakes up and says, well, we also need renewables, guess what? Where are we going to get the resources for them? How are we going to enter this market? China probably has a massive position in silver, which is vital for solar. I mean, and it goes on, and copper. The United States is fighting a war in Afghanistan where we're spending billions of dollars. China is spending billions of dollars in Afghanistan, except they're mining for copper. I mean, it's really, it's sort of like this. We're at war with China right now, not a shooting war, but we're really at war for the critical resources that we're going to need to build the infrastructure for this next century. We don't know we're at war. China does know that we're at war, and they're doing everything they can to win it. Right now, China is spending in the neighborhood of $500 billion a year. $500 billion a year in new technologies and new industries, mostly devoted to new energies. That means that by 2015, China will have spent about $2.5 trillion, about as much as the United States spent in the Second World War, winning that war. And, so China's on a wartime footing, if you will, if you measure wartime footings in terms of dollars you're spending on industries you need to win the war.
Let's take a look at the geopolitics for a second, because the U.S. is now sitting on top of a lot of the world's oil supply. They're sitting on top of Iraq's oil supply. They're now sitting on top of Libya's oil supply. They're all over Africa starting wars to secure that oil. So at what point is there a confrontation between the U.S., that's oil hungry, and China, and they're oil hungry? The U.S. has taken a very militarized approach to obtaining oil and sitting on oil. China needs that oil. Are we headed toward a conflict there, number one? And number two, is China's alternative energy approach, as you are talking about here with wind and solar, is that going to be able to leapfrog them beyond hydrocarbons? Stephen Lee.
Well, yeah, I think it already is. I mean, solar right now, in many cases, is competitive with hydrocarbon, and so is wind. And China is the one that can produce the lowest cost wind and the lowest cost solar. So, yeah, I think that they are leapfrogging to some extent.
A lot of folks are speculating that the price of precious metals has been kept artificially cheap, particularly on Wall Street, where there's an incentive to support the dollar versus precious metals. So going forward, the question, Stephen Lieb, is how do you see the dollar versus precious metals going forward?
I think, I don't want to sound like a nut, because I don't believe I am a nut. I've spent most of my life not liking gold at all, but I think gold's going to go dramatically higher. And, when people say favorite investments, I think you just have to own gold. Basically, Max, it comes down to this. We live in a world of scarce commodities that are becoming scarcer. And in those kinds of conditions, you can't ration these commodities by using something that you can just print. Everybody can print their own currencies as much as they want. Gold is something that's relatively fixed. Yes, we add a little bit every year to the supply, but right now China and India, incidentally, are buying all the incremental supply of gold. All the new gold that's mined is being purchased by China and India. So gold is really just kind of fixed, and you need something that's fixed, and something, it happens that gold has a long history as a monetary metal, and I think it's becoming a de facto currency just as we speak, and I think that trend is going to continue. And if you look at it from the perspective of inflation, I mean, eventually you're going to get inflation. And when that starts, I think you see, another leg in this kind of bull market that we've had in gold. I mean, I hate to sound, I hope I don't sound crazy, but I think you can almost look at the bull market that we've had in gold and silver as kind of a warm-up for what we're going to have over the next 10, 15 years, because, there's no way around it, in my opinion. You cannot use paper currency as a reserve currency when commodities are scarce. Now, if there's some sort of technological miracle, if someone comes up with an analog to cold fusion and energy becomes very, very cheap again, all bets are off, and I'll be the happiest man in the world. But as we stand and talk right now, that's not on the horizon, at least in my opinion. And as long as these commodities remain scarce, gold is going to be the only reasonable reserve currency in the world. And I think the Chinese see this, incidentally, and I think they're headed for a gold-backed yuan. I mean, in China right now, I mean, it's amazing.
Whoa, back it up there, buddy, Stephen Lieb. Well, you think you're talking about, you're saying that China could come forth with a gold-backed yuan. Now, this would be because a lot of people are making the speculation, and they're saying that whatever country does come up with their first gold-backed currency is going to win the global currency war. People who've read, for example, Jim Rickards' new book, Currency War. Now, you're suggesting that China could make that move. Talk a little bit about that. We've got 1 minute left.
Okay, they're not going to make it overnight. I think China thinks in terms of 10 and 20 years, and I think over the next 10 or 20 years, they want to really control the gold market to the greatest extent possible. That will lead to some form of a gold-backed yuan. Right now in China, Max, you can put a debit card and get $150,000 worth of gold out of a machine. I mean, they're on their way. They want their public to own as much gold as possible. They're probably going to be accumulating as much gold as possible. Now, whether that leads to literally a gold-backed yuan or some facsimile, I think it's going to happen.